Hey guys, what's up? Today I'm just going to be demonstrating just a live kind of analysis of me going through my thoughts when I go from daily down to my executing time frame and how I analyze my thoughts, how I create a trading idea and a narrative for the day. So it'll be an easy way to follow along and see a real demonstration of all the concepts that I teach or that you see other people teach. Um, It'll be very short. It'll be simple. We start on the daily time frame. Some things that should stand out to you. This is all-time high. Why does that matter? Because in all-time high markets, you're generally going to be more bullish and bearish. And so it's good to identify that when you're close to the all-time high, even though it's 600 points or 700 points on Nasdaq, that could be 2 days, you know. And so that's just to keep in mind. But your intraday, this is on the daily. It doesn't mean that you can't short intraday. It doesn't mean that the day won't be bearish. It just means that overall there's going to be more longs than shorts because the market's been going up. So here we see an unmitigated daily fair value gap, and I'm a bit sick. My apologies. Unmitigated daily fair value gap, and because it is untouched and it's waiting to be rebalanced, it is a draw on liquidity. Yeah, so the daily time frame is fair bias and draw on liquidity. It's very important. This high right here, this swing high that's not been taken and stands above everything else to the left since the fair value gap and everything to the right the market's not gone up to. This is my daily buy side liquidity, draw on liquidity. Like I don't even need to specify like this. It's just I say everything between buy side, sell side, and then this one specifically is my draw. And today, I think it's very realistic the market can actually go up and hit it. Um, Over here, you see that we inversed this fair value gap a few days ago, and over here we had a bullish gap that got respected, and we are getting these long wicks down and then pushing prices higher. And even though we're not trading with the same momentum as these days, it market's still bullish, and I believe that from here we're gonna see a pretty rapid move up to all-time highs next week. But again, I'll just keep reading what the market says to me. Right now, I think we're hitting this target. I marked out this previous day high here for myself, but this would be the previous day high, and this will be the previous day low. Also, strong draws, but let's look what happened. We have a bullish candle here. We hit the previous day high, but we still went bullish. So even though we didn't go past this range, we didn't even go under the body. And then here we have a bearish candle that again stayed in this range, took the previous day high, had a longer wick down, went back up. And here we opened, and we might take this and reverse down. We might just take this, but regardless, I believe we're going to take this and go up to this daily buy side liquidity target. So on the daily, I am bullish, and that's what I'm looking for. Then I go to 4 hour. Now for the hourly charts, I'm finding some other draws on liquidity, but I'm also just looking for overall activity with fair value gaps and PDRAs to get still the type of direction the market might be going in. Because if it's bearish on the hourly and bullish on the daily, I could be looking for some retracements, and then I just have to keep in mind that it can switch at any moment. But again, for if you're executing on 5 minute or less, you have to really look at the hourly charts. They're very prevalent to your actual day. This is relative equal lows, sell side liquidity. And I just mark this out even though I'm bullish. It's important. You never know if market will switch. You don't know. Here you have a 4 hour BC, which is a bullish fair value gap. And if this stays unmitigated, I'm bullish. But price might go down here and go back up, still be bullish. But if price ever reverses here later in the day or even in this 4 hour candle, then that's when I'd be temporarily bearish, or at least look for a bearish liquidity target, on the hourly charts. There's some more here, but I don't feel like I need to mark them right now. We recently took this one out and we reacted to it. Now we're going back up. So we look for internal, and then when we're going back up to external now. On the 1 hour, it's the same for value gaps. These small ones are irrelevant. I'm looking for major, like, relevant for value gaps. And now I look into the sessions and more intraday stuff. I go to the 15. You could do 15. You could do 5. It's the same thing. Sometimes the 15 is cleaner. I look for very relevant 15 fair value gaps, like this one right here. We have a 15-minute bullish fair value gap, and what do we have inside of it? Asia session starts at 8. Oh wait, it's not Asia. Asia session was over here. Whatever. Regardless, we have a very good sell side liquidity target, internal, and you can see how it's the most relevant ones beyond this big wick. Like, there's lows here, but I don't believe market will reverse here. I think it will either reach for this or reach for this. And I don't have a proper Asia low, but I will be marking out. I'll go down to 5 minutes so it's more clear. I will be marking out Asia's open because price might go down here, and I'll still write as Asia low, but I don't use it as a very strong draw because of, well, the fact that it's not a proper swing low. Over here you have proper sell side liquidity that is in, like, right on top of this 4 hour fair value gap, and so I think that price will retrace back here regardless of what happens. And we are developing some really nice low resistance liquidity because you see 1, 2, 3, 4, 5, 6, 7, 6, 7, 6, 7 lows that are not, they don't take each other out, and that I think price will hit here and just run through them to a sell side target before going up more. And yeah, I have this high right here, but it's right next to the daily high. I don't think it matters too much. So what I'm really looking for now, what would I be looking for? The way it stands, and we have this low resistance liquidity, and we have these points of sell side, and these bullish PD arrays that price can all, they're all internal liquidity. The bullish PD arrays, the internal lows of the range, and I guess I'll define my range. Let's say the daily range. I think that the previous day range, a pretty nice idea. You don't have to do this, but you see how equilibriums are here. Discount will be anything down here. Again, I don't know. My range could be the range since midnight open, and that's like this range right here, or a bit before midnight open. And so this could be my external, or this one. It doesn't matter. I believe that price, what I'm looking for is a strong move up to take this high, and then a displacement down, creating a inverse value gap, and then I'll try to enter if it hits my entry and target at least this target right here, go through these lows and maybe inside this for value gap. I think I'm going to delete this Asia low. I don't think it's going to be too relevant. And yeah, so if I take a trade today, maybe I'll record it live or maybe I'll record after, then I'll update and get back to you. But this is just how I go about it. And then since then, I'm usually sitting on the chart, so throughout the day I just update whatever has happened. In the few hours I'll see maybe price revert inverse this, maybe price went all the way up here. You stay up with it, but this is how I analyze. It's very simple. A few things on the charts, a lot of things just to keep in mind in your head. And yeah, so now I'm just waiting for a setup, and that's pretty much it. That's my daily analysis. Some days there's more, some days there's less, depending on how the market is. I'm reading what the market tells me. That's how you should be looking at it. Don't force things onto the market, and don't make it a mess. It's all the same charts. So yeah, thank you for watching, and I'll appreciate any comments, likes, anything. Let me know anything I can do to improve. Let me know any content you guys want, and yeah, I'll update if I get anything else. Alright, so I'm just gonna put this right after and show how my analysis came through. So actually I'll just clear all this up, I think. No, I'll just go with it. So where we were, this is the trade I took today, and we'll go over it again. So we'll go through the daily. As you can see on the daily, price has gone up and hit my daily drawn liquidity that I wrote down, and you can see how it's trading down. Now it did not hit this fair value gap yet, meaning that I believe that we have 4 hours until the close. Unless price runs up, which is unlikely, I believe that if it closes like this, then we're going to be delivering off of this and go for some internal liquidity. But that's for next week. I will make a different video. This is previous month high that we're going to reach, I think, this month, and probably all-time high. And so, see on the daily, we hit the previous day low. So just like I put. Now I know it's a bit of a mess. Okay, you know what? I'll get rid of the words, they keep changing. On the 4 hour, you can see how there's a 4 hour bullish for value gap that when I did it, we were on this candle. Now we went down to this candle, hit this sell side, which was on a lower time frame, and this 15-minute fair value gap. But you see how we respected this, and then we're going down and respecting this again. We're delivering off here, but we're still respecting this. Right now, I wouldn't really have a bias. However, I think that this fair value gap, after we traded through it and all that, like it is pretty, like it's not relevant anymore. But you can see how that fair value gap was traded into in this candle and respected. And once we respected that fair value gap, then we went up to this draw on liquidity on the daily. Very important to note. Now in the 1 hour, on the 1 hour, I guess we did inverse this fair value gap, but that's why I put the 4 hour one, because it was more relevant, and I was expecting price to go here, so of course it would inverse here, you know. But it's on the one, like, you have to understand to differentiate the time frame, have context, and all that. Because you see right here, we have this big 1 hour candle. Market went crazy. Now let's go to the 15-minute, and then I'll start talking about the trade. Again, I made my analysis at around here at 2. Just go on the 5-minute, but I just want to say on the 15. I remember I marked this relevant 15-minute fair value gap with this major point of sell side right here, and look, it doesn't get more perfect than this. I'm not gonna lie. This is incredible 3 candle, I mean more, but like reversal. Someone could have taken this inversion play right here too. I again wasn't trading. I'll go over my trade. I made a good amount. I made 1,800 today. Crazy, like really good trade for me. And yeah, that's why I marked out this 15-minute gap. 15-minute gaps are useful, especially when they're this big and obvious and they have sell side within them and everything. You're delivering off of sell side and a PD array. So let's go 5 minutes and let's go over what I did and how I traded. If you remember, again, we were around here. I marked out this buy side liquidity, and the previous day high was somewhere around like this level. So I'm putting them together. And then this was the first major swing low. Why was this so major? Because here you have a short-term low, because it's a swing with a swing on both sides. And then you have a swing here with a swing on both sides, this one here and this one here. And then you have this one here with one of these on both sides of it, like that are lower. This makes this a prominent low, kind of like imagine like a triple top or something like this. So having this on both sides, and then these ones individually, like imagine you zoom in here and it's also like this. So you have something like, I don't, why is this so squiggly? You have something like this. Whatever, you get the concept. This is a very high like liquidity low, very good low. So this is my range, and what I noticed was the low resistance liquidity that was building up here. And remember, I'm just gonna draw like here, it's not important. Here we had this big 4-hour gap, right? So that was here. So what did I expect? What did I say that was gonna happen? One, I wanted to target this high. But before that, I did say that we will probably have a retracement down this low resistance liquidity and into this bearish gap, and maybe even the sell side liquidity here and this 15-minute gap. That's why I marked it. Didn't mark anything past that. I literally chose to stop here. And what happened? Price created kind of a low resistance on the high, and then manipulation. Now, how do I know this is manipulation? Because this candle, if you're watching it live, just instantly jumped up and was like the volume was much greater. And then you swept this, had a reaction to it, and initially I thought I was going to have a 5 minute fair value gap over here because price opened here, went up, it hovered, and at the end it went low and then back up. And so on the lower time frame, maybe there was an inversion, but I trade on the 5 minute. Now we went up and we double purged. Now there's a ICT concept you should know where you'll have a candle and then another candle and then another candle. And the first one will, let's make it more realistic like this. Like this, okay? Pretend it's even. This is important. First one, we will sweep. Oops. We will sweep, and then we will resweep. And you have these 3 highs, right? And then this one is the one that gets shorted off. In other words, imagine a liquidity sweep and then another repurge of that sweep. And that's what it is. Look right here. We had this high and then there was a daily high right above it, and we swept it, created a swing high, and we went back up, reswept it, displaced, created this 5 minute fair value gap, instantly took it. Now I marked my equilibrium from the manipulation leg, which started on this 3 a.m. candle until the high, and I only enter from above this green, so I chose the middle of the fair value gap for a higher, for better risk reward. Now you can see it retraced, happens often. I noticed this in my back testing. I used to enter off the candle close, and then my trades would be in the red all the time, instantly. Besides a few lucky ones that just went straight up or straight down, like these ones. But the issue is that even if you trade these ones, your risk reward is really bad, because by the time you get the inversion, like here, right? You inverted this candle and this candle from here, like you could put your stop tighter. You could, but in reality, you're using the protected low. And to catch, to catch this amount of points, like 150 points, double the amount of caught here, over double, you're getting 1.5 R. Like again, in hindsight, you could put your stop here, but you never know if price would have gone down literally to any point up above the low. So that's why I put my entrance here, my entry. And now where was my take profits? My first take profit was at the manipulation leg low. I got rid of the labels, but here you can see it's an AMD setup. Here was accumulation. Now what's important about accumulation that I look out for? I need my accumulation to be creating low resistant liquidity. Why? Because accumulation is not just random. It sets up the next move and you can read it. Now this accumulation right here, especially this part, you can see the low resistance liquidity add up, but once you see this low resistance liquidity, this high, and these 3 lower highs add up, that's when you know you're really accumulating, you're creating this low resistance liquidity on both sides. Price will manipulate one way and go the other way. Exactly what happened, especially when the major low resistance liquidity was here. Price is due for a retracement, everything I explained, and so this right here was the manipulation. Right here. So all I need now is a confirmation of us moving from manipulation one way to distribution, or a change in the state of delivery. Wow. It's almost like this concept is exactly what we're looking for every time we trade. We always want to trade inversions off of a manipulation leg. And an inversion is a change in the state of the delivery. So you're not taking every inversion fair value gap. You're taking the ones that change from a manipulation leg to a distribution, and it's always a reversal because you don't manipulate in the same way you distribute. And so after we enter here, quickly we went to this first target. Easy. And I was gonna post this live, but then the trade took a long time, as you see. And I don't mind waiting this 5 hours. I can just check on my phone here and there to manage, and I set alarms, and I don't need to be on it. And so now we started the distribution. Now I thought it was going to be more clean, but again, I'm not here to dictate what the markets do. I'm here to just do what they say. And we take this first low, and we go down, we go up, and we go down, and we wicked this one. I would say I chose this low because it's the most prominent low in this run. Now I would have waited all the way until the four, but I'm trading on an 100k account, and I would rather take some more profits. I don't need to wait for this. And this one was a 1.3 something R, and yeah. Anyways, I set this TP here. I thought it was good. Eventually, though, price. This is me. Like this is a lesson on patience too. Price, because even on 1 minute and anything doesn't matter. It will always do this. And you can see another AMD setup on the lower time frame. Accumulation, manipulation. Like again, I'm trading from the very high time frame idea, a big retracement. This is all noise. Price is going here. I don't care what time is it. Obviously, it was slower. It was slower here. It accumulated between the end of London and the start of pre-market. Happened, and then we distributed. We instantly had this, and then I actually sold over here because I had to. I was busy and I was on the trade for so long, but price ended up hitting here, and that's what happens. But again, the trade idea was correct. Not only that, it went down all the way through the fair value gap, sure, down to this sell side target right here, instantly reversed and went all the way up to my previous day high, or my not previous day high, my daily buy side liquidity target. Then it retraced, and now we're just kind of trading around. Price hit here, price hit here. It's not gonna move anywhere. It's Friday. It's gonna close the day probably sideways here. Maybe it'll take liquidity here. It's kind of has a low, has a high, another higher low. It's just gonna accumulate, I think, here, and then start the week on Monday, delivering off of this liquidity and finding some internal. Where would it go? This low right here, this low right here, and these lows right here. Maybe this, maybe down here. Um, yeah, like look at the 4 hour. All right, let's just look at the daily, and I'll make a video where I think price will go for the week. But there's a fair value gap here with the low in it that we respect and we might retest. There's an untouched one, pretty small though, or just these lows right here, probably down to this one, a rejection candle, and then we'll go up. But yeah, that is my follow-up to my analysis. As you could see, today it played out perfectly, and this is what I mean. These are the only concepts you need. You understand liquidity, you understand everything in the market. So yeah, and hope you made it this far into the video, and I will be teaching all these concepts throughout the week individually, and just stay tuned for that, and thank you for watching.